Invest $50 a fortnight into CommSec Pocket using Auto Invest, and 4% of your money disappears to brokerage fees before your investment earns a single cent. Is this platform actually worth it for beginners, or are you overpaying from day one? I've pulled apart every fee, every ETF option, and every limitation, and by the end, you'll know the exact dollar amount where Pocket stops being the cheapest option and what to use instead. CommSec Pocket sits inside the CommBank app, and with more than 11 million Australians holding a CBA transaction account, most people already have access, but easy setup doesn't mean it's the right fit for everyone. So let's break it down. Here's how it works. You pick from 10 curated ETF options based on themes like technology, sustainability, and top Australian companies. You buy whole units with a minimum trade of $50. That's the whole product. No individual shares, no ETFs outside those 10, no roundups on your everyday spending. That's Raiz, not Pocket, and it's a common mix-up. You do need to be 18 years or older, with an Australian residential address, and have a CommBank account to get started. The simplicity is deliberate, and for someone making their first ever investment, it removes a lot of the overwhelm. But the fee structure is where things get genuinely interesting and where most people don't dig deep enough. Trades up to $1,000 cost a flat $2. Above $1,000, you pay 0.2% of the trade value. There are no account keeping fees, so on a $500 trade, you're paying $2. That's an effective 0.4%. On a $1,000 trade, still just $2. Sounds cheap, and at that level, it is. But here's the part most reviews gloss over, that 0.2% above $1,000 means fees scale fast. On a $2,000 trade, you're paying $4, on $5,000, $10. Compare that to Stake, which charges a flat $3 for all trades up to $30,000 on any ASX listed security. The crossover is exactly $1,500 per trade. Below that, Pocket wins, above it, Stake is cheaper, and the gap gets wide. Let me put real numbers on it. If you're investing $500 a month for a year, CommSec Pocket costs $24 in brokerage across 12 trades. Stake costs $36. Pocket saves you $12, small but meaningful when you're starting out. At $1,000 a month, same result. Pocket still comes in $12 cheaper. But at $2,000 a month, Pocket jumps to $48 while Stake stays at $36. And at $5,000 a month, Pocket hits $120 for the year while Stake is still $36. That's more than 3 times the cost for the same number of trades. So the first decision is clear. If your trade size is under $1,500, Pocket's pricing works for you. Above that, you're overpaying on a platform with fewer choices. If this breakdown is saving you from an expensive mistake, hit subscribe. I do one of these every week. Now here's the part that actually surprised me most. Pocket lets you set up automatic fortnightly or monthly investments, which sounds perfect for building a habit. But at the minimum $50 per fortnight, the maths is painful. 26 trades at $2 each is $52 in brokerage on $1,300 invested. That's a 4% annual drag. A broad market ETF returning 8% would need to earn 12 before fees just for you to net 8. You're handing over half your expected return in brokerage alone. The fix is dead simple. Save it up and invest $500 or $1,000 once a month instead. At $500 monthly, your brokerage drops to $24 on $6,000 invested, 0.4%. Same total money, same habit, but the fee drag drops by a factor of 10. And there's a trap hiding inside Auto Invest that catches people off guard. The money has to be in your linked settlement account when the trade settles, 2 business days after the order. If it's not there, you get hit with a late settlement fee of $10. That's 5 times the brokerage on a small trade. If you set up Auto Invest, make sure the cash is parked in the right account before the scheduled date. One more thing on settlement accounts, the CDIA that CommSec uses may attract a monthly fee of around $5 if your balance sits below a certain threshold. Though you can use other eligible CBA accounts like Smart Access or Complete Access to avoid that. Now for comparison, Raiz charges $3.50 per month with no per trade fee when your balance is under $15,000. On the same $1,300 invested over a year, Raiz cost $42, slightly less than Pocket's $52, but Raiz uses a custodial structure. Your shares aren't held in your name. With CommSec Pocket, that's called being CHESS sponsored, and you get your own holder identification number on the ASX. That's a real structural advantage if ownership and portability matter to you. We're getting to the limitation that will matter most as you grow, but first, let's look at what you actually get. The 10 ETFs range from IOZ, the iShares ASX 200 fund at 0.09%, to IEM, the Emerging Markets Fund at 0.67%. In between there's NDQ for Nasdaq 100 Tech Exposure, ETHI for Global Sustainability, and DHHF, a diversified all-growth fund covering around 8,000 equity securities for 0.19%. 3 of these were added in mid-2023, bringing the total from 7 to 10. Here's the ceiling. If you decide you want the classic Australian and international split, say VAS plus VGS, you can't build that on Pocket. Neither fund is available. There's no S&P 500 tracker either. IOZ is a solid substitute for VAS, with only about a 3% market cap difference. But for international exposure, your closest options are IOO, only 100 stocks at 0.4%, or DHHF, which bundles in about 37% Australian allocation and would overlap heavily with IOZ. There's no clean broad developed markets international fund like VGS. For your first few $1,000s, that's not a deal breaker. But it means Pocket has a ceiling. Once you know what portfolio you want and you're investing above $1,500 per trade, you'll outgrow it. That's when you move to Stake, the full CommSec platform, or another broker where you can access everything on the ASX. Before we wrap up, a tax angle beginners often miss. Because these shares are in your name, ETF distributions hit your tax return. On $10,000 in IOZ at roughly a 4% yield, you'd receive about $400 in distributions. Most of that comes franked, meaning the company has already paid tax at 30%. If your marginal rate is lower, you get some back as a franking credit. It's a good thing, but you need to know it's coming at tax time. If you sell after holding for more than 12 months and you've made a gain, you get the 50% capital gains discount. On a $2,000 gain at the 32.5% marginal rate, that's roughly $345 in tax. Sell even 1 month earlier, no discount, close to $690. That 1 month of patience saves you almost half. Keep that in mind before you sell anything. So here's where I land. CommSec Pocket is a strong starting point if you already bank with CBA. You're investing between $200 and $1,000 per trade, and you're comfortable picking from 10 solid ETFs. The CHESS sponsorship is a real advantage, the fees work at that level, and the CommBank app integration means almost zero friction to start. But don't use auto invest at $50 a fortnight, the 4% drag is punishing. Once you're consistently above $1,500 per trade, or you want specific ETFs outside the list, it's time to move to a full access broker. Drop a comment if you're using Pocket. I'm curious which ETFs you went with. Hit like and subscribe if this helped, and check out one of these videos next. This is general information only, not personal financial advice. Please consider speaking with a licensed financial advisor before making any decisions.